Welcome to The Explainer. Today, we're diving into a genuinely fascinating piece of algorithmic trading technology. I want you to imagine having a tireless, highly disciplined digital employee, one that never sleeps, never panic sells, and strictly trades one very specific mathematically driven market anomaly every single week. Well, that is exactly what the Turnaround Tuesday Expert Advisor, or EA, actually does. We are going to unpack the exact rule set this algorithm uses to hunt for opportunities, manage your risk, and execute trades without you ever having to click a single button. Okay, let's dive right into this. We're going to track the entire life cycle of a single automated trading week. We'll cover the core idea, Monday's entry logic, filtering for the best signals, risk management, the planned exit, and finally, monitoring an ideal markets. All right, part one, the core idea of the EA.
Let's start with the absolute foundation. The Turnaround Tuesday EA is a rule-based strategy that actually manages multiple symbols at the exact same time. It's super clever about this. It uses a shared magic number, which is basically a unique digital signature. This means it can manage its own trades across different assets without ever stepping on the toes of other strategies you might be running. But what's it actually looking for? Well, it all boils down to mean reversion. Think of it like a rubber band. When an asset's price takes a sudden, short-term dip, it stretches out, and then it's highly likely to snap back to its historical average. Because this EA is built entirely around that specific bounce-back idea, it only ever opens long positions. It's literally just looking to buy the dip. It never shorts the market. And this beautifully illustrates the weekly cycle this algorithm is hunting for. Historically, in certain markets, Mondays can be kind of weak. You get this temporary dip in price as the new week kicks off. That's the setup. Then you get the payoff, the turnaround Tuesday or Wednesday, where that mean reversion kicks into high gear and the price bounces right back. The EA is systematically designed to exploit that exact transition from Monday's weakness to Tuesday's strength.
Moving on to part two, Monday's entry logic. So how does our digital employee actually punch the clock? Let's fast forward to Monday night. Now, the absolute most important thing to grasp here is that this EA operates strictly on your broker's server time. It totally ignores your local PC time to ensure ultimate precision. Honestly, it doesn't care what time zone you live in. Which brings us to the big question for the setup phase. When exactly does it strike?
By default, it strikes at exactly 22:55. That's 10:55 p.m. broker time. Why so specific? Well, this exact minute allows the EA to capture the market conditions right at the very tail end of the Monday session, right before the daily candle closes and the day rolls over. It essentially guarantees the EA is acting on a fully formed mundane data point. At that exact minute, 22:55, the EA blasts through a rapid-fire 5-step checklist. First, it reads your custom CSV spreadsheet list, and it automatically fixes any formatting quirks like weird spaces or semicolons. Second, it checks its magic number to make sure it doesn't already have an open position for that symbol. Third, it double-checks that it hasn't already traded this symbol earlier in the week because it strictly trades just once per week per symbol. Fourth, it applies any custom filters you've turned on. And fifth, if, and literally only if, all those conditions are perfectly met, boom, it instantly opens a buy position. Which leads us to part three, filters for better signals. Any great digital employee needs to know how to filter out the junk, right? You got to build your defense. Before pulling the trigger on that buy order, the EA lets you activate specific filters to make sure that Monday weakness is the real deal, giving you way higher quality signals. The first one is an optional daily simple moving average, or SMA filter, defaulting to a 20-period span. You can actually set this to two different modes. If you pick below, the EA only enters if the current price is under the moving average, meaning, yep, we are in a clear dip. But if you choose above, it only enters if the price is above the moving average. That might indicate an overall bullish trend despite a quick Monday pullback. It just gives you an incredible amount of control over the market context. Then there's this fantastic secondary quality check, the Bearish Monday Filter. The logic here is just beautifully simple. The daily candle's close price absolutely must be less than its open price. If you flip this on, it guarantees the EA only buys if Monday was a genuinely down day. If Monday ended up flat or positive, the EA just shrugs, stays on the sidelines, and waits for next week. All right, part four, risk management and position sizing. Look, even with the best setups and the strictest filters in the world, the market is still completely unpredictable. This algorithm does not gamble. It uses cold, hard math to protect your capital. So the absolute golden rule here is this. No valid stop loss equals no trade, period. If the EA can't calculate a valid stop loss or if it can't figure out a valid risk base, it straight up refuses to open the position. Capital preservation is priority number one.
To pull that off, the EA uses some really clever dynamic lot sizing inputs. You essentially tell it what percentage below your entry price to place the stop loss, let's say 5%. Then, you define your risk per trade percentage. The EA takes those numbers and crunches the math to figure out exactly how large your position should be. That way, if your stop loss does get hit, you only lose exactly the percentage you were comfortable with. You can even decide if the EA calculates this using your live, fluctuating account balance or a fixed risk-based number that you manually type in. It's totally up to you.
Next up, Part 5, the planned exit.
Now we're reaching the end of the trade life cycle. Getting in is really only half the battle, right? Knowing when to get out is where the money is actually made. And the EA handles the exit just as unemotionally as the entry. Think about this timeline. Notice what's completely missing here? There are no complex trailing stops, no convoluted exit algorithms based on momentum indicators like RSI or MACD. The default exit relies entirely on time. If you entered on Monday at 22:55, the EA is pre-configured to close everything out at exactly 22:55 on either Tuesday or Wednesday, depending on your settings. It basically assumes the mean reversion has done its thing over that 24 to 48-hour window, locks in the result, and clears the slate for the next week. And finally, Part 6, monitoring and ideal markets. So we've walked through the whole operation, from spotting the Monday dip to this strictly time-based exit. But as the boss of this digital employee, how do you actually know what it's up to? Well, the amount of data it gives you at a glance is incredible. It features a dashboard that updates on every single M1 tick. Basically, it refreshes every single time the 1-minute chart moves. It tells you the current status, active filters, your exact risk per trade, and your cumulative profit and loss. Plus, it actively journals absolutely everything. If a trade gets rejected because that bearish Monday filter wasn't met, the EA logs that exact reason right in your terminal, so you're literally never left guessing. So where should you actually put this thing to work? The source documentation is super clear on this. The strategy is custom built for broad index markets and highly liquid CFD instruments. And there's a really good reason for that. Those specific macro markets are the ones that most reliably show that behavioral Monday weakness and the weekly bounce back. Highly volatile, thinly traded stuff like altcoins or penny stocks, they just don't really follow this psychological weekly rhythm. You want the big, liquid markets for this. We've seen how the Turnaround Tuesday EA uses hyper-precise timing, strict filtering, and absolutely unbreakable risk management to trade a proven market anomaly. It takes all that messy human emotion and replaces it with a cold, disciplined, rule-based machine. It's intentionally simple, leaning on consistent time rules rather than a bunch of laggy indicators. So I'll leave you with this. In a market that is so often driven by pure fear and greed, are you ready to step back and let cold, hard data drive your Tuesday turnaround? Automating your discipline could honestly change your entire trading game. Thanks so much for joining me for this explainer, and keep exploring.